So I'll start recording the class right away. So good evening to everyone. Um my name is Derek. Let me just share my screen. You tell me when you can see the screen. Yes, can you see my screen? Okay. I guess you can see my screen now. Okay, great.
Yes.
Great. So my colleague took you through sorry, the management accounting that was last week. And today and tomorrow we'll be looking at auditing and internal review. Firstly, auditing as a course is divided into two aspects. So you do auditing and internal review for the first semester, that's block one. And then block two, you do auditing and assurance. So there's a difference between the two. So the auditing and internal review looks at the introduction of auditing, the institutional um, scenarios when it comes to auditing. We'll look at issues like internal audit, internal controls, and all of that. That's auditing and internal review. When it comes to auditing and assurance, the assurance aspects will look at the audit reports, different kinds of audit reports, issues like audit sampling, how to conduct an audit, the various forms of audit and all of that. Yes, Sylvia, yes, the recording will be posted. Thank you. So that's for auditing and assurance. But for this semester, first semester, we'll be looking at auditing and internal review. Auditing and internal review. And I'm going to be your humble servant. This is my name. But I prefer to be called Financial Derek. I feel like it's an easier way of um relating to me. So this is my name. Sorry. I'm called Derek Blankson, and I'm a final year or a final part student of the Institute of Chartered Accountants. Currently I have a master's degree in finance and accounting from KNUST. I also have a bachelor's degree. My first degree was in accounting, and I had an HND before my first degree from Accra Technical University. So I'm your facilitator for auditing and internal review. I hope we'll have a very fruitful time. I'm a very open person. You can feel free to ask questions if you don't understand anything. I'm available to assist you with answers to questions you may have in mind. The class is going to be a very interactive one. If you have any question at any point, you can raise your hand and then I'll allow you to speak. Um, so basically that's a brief introduction of myself and also of the course. So let me stop sharing this and then we'll start the main business. But before we do that, do you have any questions? Questions, concerns, suggestions, anything? Anyone, please. Okay, with the absence of any question, I think we can start our class today. Since today is our first day, we'll not be looking at so much in detail. we'll just be looking at the surface of auditing and trying to get a fair idea about what the course entails and the issues that encompasses when it comes to auditing. That's what we'll be looking at. So this is lecture 1. We'll be looking at the theory and philosophy of auditing. Theory and philosophy of auditing. So basically, when we say theory or philosophy of something, we are looking at what are the foundation or what are the ingredients that makes auditing to be auditing. So these are the issues we'll be looking at. And this is the course that I'm very, very much passionate about. So this is a brief introduction. We say auditing provides assurance. So when the auditor carries out an audit assignment, basically what the auditor is doing is that he's trying to provide what we call assurance. Simply means he's trying to inform shareholders. Firstly, shareholders are the owners of the entity. Because they are the owners of the entity, and based on corporate governance issues and procedures, most of the times, the shareholders or the owners of the companies do not manage their own entities. So they appoint someone to manage the entity on their behalf. So the person that they appoint to manage the entity on their behalf will normally refer to those people as stewards or managers. So they are in charge to run the day-to-day activities of the entity on behalf of the shareholders. So at the end of the day, these managers, their mindset or their attitude towards the business may differ with what the objectives of the shareholders may be. So because of that possibility of variance in mindset between the shareholders and that of management, there's a need for a third party to come in to give an assurance. So that third party, either a person or an entity, is referred to as what? The auditor. So that's why we say an audit provides assurance to the shareholders and other stakeholders of a company that the financial statement of the company in itself is independent and impartial. So what we are saying is that within an entity, you have different stakeholders. You have suppliers, you have the government agencies, you have banks, you have customers, you have employees, you have the environment and all. These are all stakeholders of the entity. At the end of the day, these various stakeholders need to be given a form of assurance that the company is doing the right thing, the company is healthy, the company is abiding by the rules and tenets of the laws that governs entity. So the only person that can give that kind of assurance, it can only be done through an audit. That's why an auditor must be independent and impartial, because you stand in between the managers of the entity and the other stakeholders. Therefore, you shouldn't have any personal interest in that of the entity. If you have personal interest, it clouds your judgment as an auditor. So we say long ago, before auditing even became a profession, there was a need to give some form of assurance. So by then, this is what used to happen. The owners of plantations, the owners of farms, when they produce their crops, they normally leave the crops in charge of managers. The managers are supposed to oversee and ensure that they sell the crops and ensure that the business is running efficiently and all of that. So that was the primary responsibility of these stewards. They stand in between the managers, sorry, in between the owners of the business. So these owners, because of how busy, okay, there's a hand up. Richard, yes, please. You can ask your question.
Oh, this is Okumo. I'm using someone's laptop.
Come again.
I'm Okumo.
Okay, sure, no problem.
Right. Please, you made mention of independence of an auditor, and it should not infringe into anybody's affairs. I want to find out some of the factors that contribute to personal interest of the auditor.
Okay, that's a very good question. So, there's a topic called, I think it will be our third or fourth lecture. It's called Fundamental Ethical Principles of an Accountant. Every accountant is supposed to abide by 5 fundamental ethical principles. I'm sure most of you've come across it before. So these principles, it entails integrity, objectivity, professional competence, professional due care, and confidentiality. These are the 5 fundamental ethical principles of an accountant. Coming back to your question, what are some of the scenarios, or what are some of the things that can make an auditor not to be what? Independent. That is to say, for an auditor to have an interest in the company. Several reasons. One, if the auditor has a personal benefit that he will accrued or he's likely to received from the entity, it means his independence will be questioned. So let's say, for example, I cannot audit an entity that I have interest in. So if I have shares in a particular company, it will be unethical for me to audit that entity because I am a shareholder of that company. Do you think that I want to come out with an audit report that gives a bad picture about the company? No. So in that case, I'm not independent. Another reason could also be is that if the auditor knows someone, let's say for example, that's why it is not even advisable as an auditor for you to audit um, an entity that you have worked for before. So that's why an auditor is not an employee of the entity he audits. The Company Act forbids that you cannot work for an entity at the same time you audit that entity. And please be mindful here, the audit we are talking about here is not internal audit. We are talking here about external audits, not internal audit. So these are some of the few reasons that will make an auditor not to be independent, or that will make an auditor not to be impartial. So these are some of the few reasons. Richard, I hope I've answered your question.
Yes. Okay. So if
But you can do a follow-up. Yes.
I want to also ask this thing. Some of the external auditors or the auditors, when
Mm-hmm.
they've been assigned to go and audit a firm,
Mm-hmm.
they end up receiving some tokens or some monies from them. Does that
Okay.
also make them an independent?
Okay. That's a very good question. Please, anyone from the class, if you feel like you also want to contribute to whatever I'm saying, you can also do that. You should also feel free. This is a very interactive class. So when when the client approach the auditor for the auditor to audit the firm, the auditor agrees with the client on what to call the audit fee. The law actually prescribes how the audit fee should even be charged. When we go through the slides, you will come across that. So once the auditor charges that fee, he is not supposed to receive any form of money or whatever it is from the client again. In fact, it is wrong for the client to even give money to the auditor. If the auditor comes to audit, you can give the auditor water, you can provide lunch. There's nothing wrong with that. But giving the auditor a form of like financial support can actually cloud the judgment of the auditor. You know, in our setting, especially our African setting, people like giving what we call oh, this is just for transportation. This is just for you to buy water. All of those things, it is unethical as a client. You are not supposed to give those things to the auditor. And also as the auditor, you are not supposed to accept those things from the client. I can remember some few years back, I was working for a company, a well-known company in Ghana. And we went for it was actually an internal audit assignment outside of Accra. So we're auditing some of the entities, shops, and the rest. And one of the managers at one of the shops, um, after the whole process, we're about to write our reports. And then he called my boss by the side and he gave my boss like a sum of an amount, like to give to us for our transportation because we are coming from far and all of that. And right there, my boss rejected the amount and told him that management has already made provision for our everything. So there's no need for him to give that money. And he was like, oh, I'm sorry. It's not a bribe. Oh, it's just for you guys to get water. Oh, so that, do you get it? You can see that he was guilty and all of that. So what's the whole essence of what I'm saying? What I'm saying is that you as an auditor, you are supposed to abide by this fundamental ethical principle: objectivity, integrity. So you are not supposed to accept any form of gift from the client. Same way too, the client is not supposed to give the auditor anything. If it is water, fine. If it is food like lunch, it is accepted. Even with the lunch, as the auditor, you are supposed to assess the lunch to see whether it will not affect your judgment. Because let's say, for example, you go to audit. And on a normal day, if the entity provides lunch for their staff, maybe the lunch, it is 50 cedis per person. But because you, the auditor, you've come to audit, they've gone to order a very expensive lunch, let's say from Kempinski or from Movenpick. Do you get the scenario? And as the auditor, you are supposed to assess it and even reject such an offer because the offer is indirectly a means to what influence your judgment. So do you get it? So you are supposed to also reject it. Once you receive these things from the client, it clouds your judgment. It makes you to not actually be objective in mind and also in thoughts. So it is not just advisable, but you are supposed to reject it outrightly. Me, if I'm an auditor, I'm not sure a client may even want to offer me such things because my demeanor and how I will even go ahead with my work, you'll not even be brave to like try to offer me things like that because obviously it will be rejected outrightly. I hope I've answered your question, my brother.
Yes, please. Thank you very
Okay,
much.
you're welcome. So, how did the auditing profession developed over the period of time? So we see that in ancient Egypt and Rome, what used to happen was that at those times they used to have what we call estate managers and tax collectors. So these are people that go and collect funds from the citizens and all of that. So there was a need for the leaders of that time to put in place a mechanism to check whether these tax collectors, whether these estate managers, they've actually accounted for whatever they've collected. So that whole process was where auditing started from. And from the initial stage, the whole emphasis of auditing was on the detection of fraud and irregularities. So back then, the whole understanding of audit, whenever someone hears about audit, it means the auditor is coming to catch thieves. It's coming to catch people who are practicing financial malfeasance and all of that. But in the modern era of auditing, this is not the emphasis of the auditor. The auditor is not there to detect fraud and those things. That's not his main reason for auditing. Fine, in the process of auditing, if he comes across fraud, there's an auditing standard, I think ISA 305. There's an auditing standard that prescribes how the auditor is supposed to deal with issues related to fraud. However, in the modern era, the auditor's main concern is not to catch thieves. That's not the main reason why he's there for. So please, when the auditors come around, don't be scared. Those of you who work in the accounts office, when auditors come around to audit, just get your things rightly. If you are doing your things correctly from day one, why will you be so scared when they say auditors are coming? You shouldn't be scared once you are doing everything correct. But you and I, we know that most of the time people get kickbacks, they don't keep proper books of accounts, their documentation is poorly kept and all of that. So whenever they hear that an auditor is coming, they are always anxious that the auditor will find something. So because of that, there's this fear and panic always in some of the clients when the auditor comes around to audit. Please, any questions so far? So we say at that time, when the managers and the tax collectors, when they prepared the financial statement, there was actually a need for an independent person to take a thorough look at the financial statement or the account to see whether the accounts were actually prepared correctly, whether every fund has been accounted for and all of that. So previously, what they used to do is that when they prepare their accounts, they will go through their account together with these independent, trusted individuals. And once they go through their account, it's like they are coming to read their account out. That's how it used to be like. So it was in the form of an oral way of communication. But in our modern era, auditing is, you don't read an audit report is no longer in that oral form, but is in what? A written form. So now when you go to most entities, especially the banks, just observe when you go to a bank, you can see that on their wall they've pasted their audited financial statement. So when you get the audited financial statement, personally, when I get any audited financial statement, I don't even go through the whole statement. I'm just looking for one sentence in the audited financial statement. As we go through the class, you will appreciate auditing more in the sense that when I give you a financial an audited report, you should be able to tell me what are the main ingredients in the audit report. And you should also be able to write an audit report because it can come in an exams. You can be asked to write an audit report, or you can be asked to identify the key areas in the audit report. So for now, let's just hold our horses and just have a fair idea about how the course in itself look like. So let's now look at, so this is what I explained first. The audit report was oral, but in our modern era, it is written. We don't do an oral audit report now. Okay, so now let's look at the theories behind auditing. So before we even get to the theories behind auditing, there's something called separation of ownership. I started with it when we commenced the class. I told you that when entities are formed, the entities are normally formed by their shareholders or the owners. They own the company. These owners, because of how busy some of them are and how sparse they are, when I say sparse, like they are at different locations, they cannot manage the company by themselves. So what they do is that they appoint a body called the board of directors or the board of governance or those in charge of governance. So sometimes this entity board, the board of directors, blah blah blah. So the board of directors, they are supposed to like oversee the whole running of the entity. Then the board of directors appoints management. It is management that oversee the day-to-day activities because they are on the grounds. They actually oversees the day-to-day activities of the entity. So whenever we talk about auditing, auditing is rooted in this concept of separation of ownership from management. That is to say, management, the ownership of the business is normally different from those who manage the entity. So owners are different from what? Managers. So once owners are different from managers, it creates a very important concept in accounting or in corporate governance we normally refer to as so that concept where management is different from that of the owners of the business, it creates that kind of link in a way that how sure are we that management is actually doing what the owners of the business actually want? You cannot be too sure. The only way you can be sure is to appoint an independent person to check the activities of management. Okay. So remember, I said that in this modern era, the concept or the whole essence or the objective of auditing is not to catch thieves. That was in the previous generation. In our modern world, the objective of audit is to express an opinion on whether the financial statement shows a true and fair view and whether it has been prepared in compliance with the applicable laws and regulations. So what I want for you to take from today's class is that the objective or the essence of auditing in this modern era, it is an expression of opinion on whether the financial statement shows a true and fair view and whether the financial statement has been prepared in accordance with applicable laws and regulations. That's the whole essence of auditing now. Remember, I told you that when I pick an audited financial statement, I'm only interested in one line. It's just one sentence. That sentence will tell me that the financial statement shows either a true and fair view or not. That's the only statement I'm really interested in. Once I'm able to get that statement from the audited reports, I'm okay. Even if I decide not to read the rest of the paragraphs, I'm okay. But before the auditor can see whether the financial statement shows a true and fair view, he doesn't just come and say it like that. Oh. There are lots of processes, procedures, standards that the auditor follow before he can express his opinion. And as the class go ahead, we'll look at them one after the other. Auditing is really, really bulky, but once you have the mindset of understanding it, you agree with me that it is one of the most practical course you can ever do in accounting because it is a living being. Auditing is a living being. So now let's look at the theories of auditing. So firstly, let me ask the class, what is the meaning of theory? Or when we say theory, what do we mean by theory? Anyone can answer. What do we mean by theory? I'm sure we've heard the word theory before several times.
Theories are words that someone has propounded or someone has said.
Okay. Please, your name, the person who provided the answer.
Samuel.
Samuel. Okay. Thank you very much, Samuel. I want to do my very best to get to know everybody. You are my friends. We are friends. Okay. So I've seen Samuel. Okay. And the guy who asked the question first, that was Richard.
No, that's Okumo.
Yes, who was answering the question?
Okumo. That's Okumo.
Yes. Mm-hmm. Yes, you were providing an answer. I didn't get you. Were you giving an answer or you were asking a question, please?
I was saying that I'm not Abuaji.
Oh, okay. Sure.
Uh,
Okay, that's fine.
I was using Abuaji's.
Okay, no problem. That's fine. So let's now look at the theories of auditing. So someone has explained what a theory is, and he says that a theory is a statement that has been propounded by someone. Not only that, but it has been accepted to be like truth over the period of time. So that's theory. So that's fine. So in every profession, we have different forms of theories. So the same thing applies to auditing. In auditing too, we also have different forms of theories. So one of the theories of auditing is what we call the policeman theory. But before that, we have four main theories in auditing. Four main theories in auditing. Let me find my highlight. We have four main theories of auditing. And these theories were propounded by Hills et al. 2025. And academia, whenever you see et al., who can tell me what does it mean?
And friends or and all and the rest.
Yes, and others. Great. So meaning he wasn't the only person, but maybe he was like the main person, and then you had other people. So they propounded 4 theories of auditing. So these are the 4 theories of auditing. So these are the 4 theories of auditing. We have the policeman theory. We have the lending credibility theory. We have the theory of inspire confidence, and then the agency theory. So I'm going to take my time and go through them one by one. Let me ask a question to the class. When we say a policeman or a police officer, who really is a police officer? What's the job of a police officer?
To
What's the
maintain
job of
peace
a
and
policeman? Yes,
to maintain peace and orders,
great. To maintain peace and order. Any other person?
and also to protect the public
To protect the public.
in terms
Great.
of thefts and others.
Okay, great. So when we talk about the policeman theory, the policeman theory is a theory in auditing that says that the main task of the auditor is to prevent and detect fraud. Remember, when we started this class, I told you that that was the essence or the objective of auditing before, to detect and discover fraud. So when we look at the policeman theory, we say that it is a theory in auditing that states that the auditor is responsible for searching, discovery, and preventing fraud. This was the case previously. However, in the modern era we are in now, in this age of AI, and in this age of technology, that's not the main aim of auditing again. So auditing has passed this whole stage of searching, discovering, and preventing fraud. So when the auditor comes, his job is not to come and search for fraud. He's not there to come and do discovery or prevention of fraud. All these things, it is the responsibility of management. Management is the one that is responsible to discover and prevent fraud, not the task of the auditor. So we say, however, more recently, the main focus of auditors has been to provide reasonable assurance and verify the truth and fairness of the financial statement. I want to cover and color this whole sentence. So what we are saying is that currently in this area of AI and in this area of knowledge, the main focus of the auditor now is to provide what we call reasonable assurance. So let me break it down. Someone may ask me, what do we mean by reasonable assurance? Reasonable assurance simply means a high level of assurance. Reasonable assurance means a high level of assurance. It is not an absolute assurance, but it is a high level of assurance. And this high level of assurance is to what? Verify the truth and fairness of the financial statement. Is the financial statement, does it show a true and fair view of what actually happened? Are the numbers in the financial statement, have they been properly casted? Have they been properly allocated? Has all the disclosures been made? That's what we mean by truth and fairness. So this is the aim now of the auditor, not discovery and prevention of fraud. That was what used to happen in the past. Then let's now look at our second theory of auditing. Please, at this point, if you have questions, you can please ask. Okay, let me ask a question to the class. So if we are saying now that the focus of the auditor is not to detect, prevent fraud and all of that, what in case in the process of auditing he come across fraud? What is he supposed to do? The question is to the whole class. What is he supposed to do? Since now detection of fraud, searching for fraud is no longer his aim, what in case if he come across fraud, what is he supposed to do?
To me, I think it should be part of their report after everything.
Okay. Please, your name, and kindly change your name. Like I want it to your real name.
Okay, please.
Your name, please.
Charles.
Charles. Okay. So please change the Samsung to your actual name. Great. Charles, that's a good answer. Any other person?
All right, I think he's supposed to raise management awareness to the fraud or whatever that he has detected so that they can work on changing or correcting it, since his aim is not to prevent it. And yeah.
Okay. Samuel, good answer. Great, great, great. Let's take one last one from the ladies are not speaking. Me, I like ladies to talk in my class. So. Yeah, Abigail, yes. What do you think?
Okay, so um my answer is similar to what Samuel said. Since
Okay.
they're not there to prevent or condone to the wrongful acts of the institution, they are to report to the facility managers or something. If there's anything that they need to do right, then they do. If they give him reasonable reasons or answers for the correction, then so be it. But if not, I think the law will definitely be applied. Yeah.
Okay. Great, great, great. All the answers are correct. But the first thing we need to understand is what is fraud? We need to understand what is fraud. Fraud is an intentional act carried out by someone to gain advantage of a situation. That is basically fraud. Like the person was aware of what they were actually doing. It's not like they didn't have any knowledge. They knew what they were doing. Okay, that's fraud. And we have different kinds of fraud. In fact, most of you here, you've committed fraud, but you don't know. Fraud is not the fraud that we always think about, like those fraud guys and all of that. That's not the only fraud, though. There are different kinds of fraud. Different kinds. And very soon we'll go through the different kinds of fraud. It's actually one of my favorite topics. So, even though this is not the auditor main objective any longer, however, in the process of auditing, once he come across fraud, he's guided by the auditing standards, and that standards empowers the auditor to report issues related to fraud to management and also to those charged with governance. If they decide to do nothing about it, and if in case actually the fraud is one that has the propensity or the probability to actually cause harm, maybe to customers or the public at large, the auditor has a responsibility to report the said fraud to the authorities. So in the process of auditing, it's not because you, the auditor, you are guided by confidentiality and all of that. There are certain things that are, if it is illegal, confidentiality doesn't cover it. If the client is involved in a very illegal act, and in the process of auditing, you are able to discover it, you don't say that he's my client and therefore we are covered by a confidential contract. No, you must report it. However, there's a thin line between you reporting it and then you not reporting it. Very soon we'll come across that thin line. So let's look at the second theory of auditing. The theory of lending credibility simply says that the whole function or the whole focus of the auditor is that at the end of the day, the work he's doing, he's adding what we call credibility to the financial statements. And whenever we see credibility or someone is credible, it means the person can be trusted or the person can be vouched for. So for example, I have my colleague, the one who taught you the management accounting. On the grounds of everything, I can say he's a credible facilitator because I've known him for the past 6 years. I've seen what he has done. I know what he's capable of doing. So if I'm recommending someone, when it comes to issue of credibility, he might be the very first person I may recommend because what? He's a credible person. So credibility simply means that the job that the auditor is doing, the auditor is adding trust to the financial statement that management has prepared. Remember, the financial statement in itself is prepared by the client or management. The auditor doesn't prepare the fund. In fact, it is highly unethical for the auditor to prepare the financial statement and at the same time audit it. It is wrong. It is wrong. You cannot prepare the financial statement at the same time you audit that same financial statement. It is unethical. Because where will be the independence? Where will be the objectivity? You cannot be objective. It's like most of you, I'm sure you know, oh, please. I'm sure most of you, you've done cost accounting, right? With Dr. Ekuya.
Yeah.
Good. If Dr. Ekuya gives you, no, if Dr. Ekuya says that choose any 10 questions, like write your own questions and mark your own scripts. Let's be honest, between God and man, what do you think will be the least score you will get?
Maybe 9/10.
Exactly. I mean, I'll give myself 10/10. The reason being is that you cannot mark your own script. It's not accepted. That's the same way an auditor cannot prepare a financial statement at the same time you audit it. It is very wrong. There's no objectivity. So in that light, the service that the auditor is selling to the client is credibility. That is to say, once the client's financial statement has been audited, it means anyone can pick that financial statement. Once the person picks the financial statement, the person can rely on it or the person can place confidence or reliance in that financial statement. The reason being, the financial statement has been audited by someone who is independent of the person who prepares it. So you see how the analogy works. You cannot prepare something at the same time you audit it. It must be audited by a different person. That's why even in the account office, most of you, I'm sure most of you are accountants, senior accountants, and the rest. When you do a piece of work, you normally give it to your supervisor to what? Review it, right? Why do you think you give it to your supervisor to review it? There's a possibility that you may make mistakes. So your supervisor is supposed to go through the work. If there are any mistakes, correct it or tell you to correct it and even add his or her what comment to it. But you cannot be the same person who start the process and then you end the process. There's no check. There must always be what? Check and balances. Okay. Please, any question? So let's move to the third theory. So the theory of inspired confidence. So whenever we talk about the theory of inspired confidence, what you should be looking at is the supply of audit service and the demand of audit service. So let me ask this question to the class. Who supplies audit service? I'm sure most of us, we've done economics, right? And we understand demand and supply.
Auditor.
Good. The auditor provides or he supplies his or her services. And then who demands for the service?
It will be the company.
The company or the client. Great. So that linkage between the demand and the supply for the audit service is what we refer to as the theory of inspired confidence. Because the client demands the audit service, and because the auditor is experienced and he has the competence, the skills, and the know-how to carry out the audit, he supplies his or her services to the client. And at the end of the day, as he supplies his or her services to the client can draw confidence in whatever the auditor has been able to what? Give to the client. So that's the theory of inspired confidence. So the auditor inspires confidence in whatever assignment he's carrying out for the client. And then we have what we call the agency theory. This is the theory I was thinking about when I was talking about separation of ownership and management. So this theory states that an agent is a person or an entity that works on and behalf of another person. And the person that the agent works on and behalf for is referred to as what? The principal. So in other books, the agent is referred to as the stewards. The principal is the one that employs the agent. The agent works on and behalf of the principal. In an ideal world, the objectives of the principal and the agent will be the same. However, we are not in an ideal world. We are in a world that's full of personal opinions, selfishness, self-gravitation. People want their interests. People are fighting in their own interest. People are seeking their own interests and all of that. Because we are in a world like that, it means the objective of the agent might differ from the objective of the principal. Therefore, there is a conflict in mind. And that conflict in mind is what we refer to as the agency theory. The question now is, what concerns the auditor with this agency theory? Well, the auditor is actually there to minimize the agency theory, or to minimize the conflict between the principal and that of the agent. Remember, I'm using my words carefully. I say minimize. What it simply means is that the agency conflict cannot be eliminated. You can only minimize it. Because no matter what you do, there will always be an agency conflict. So since there's that conflict, there's a need to bring on board an independent person who doesn't side with management, who doesn't side with the owners, to take the financial statement, go through it, and express an opinion. So that whole scenario is what we refer to as what? The agency theory. The agency theory. Okay. Please, any question on the various theories in auditing? Any question? These are just reading and the rest. Any questions on theories of auditing? Okay. If there are no questions on the theories of auditing, we'll look at our last subtopic for today, which is the postulate of auditing. Let me ask a question. What is termed as postulate? Have you ever come across the word postulate? Postulate. Anyone, please. Okay. When we say postulate, a postulate is something that forms the basis of something. However, that thing is assumed to be true. In order for that thing to exist, it means the postulate must be assumed to be true. For example, those who are Christians, there's a postulate that Mary was a virgin when she gave birth to what? Jesus. Or when she conceived Jesus. If I'm wrong, you can correct me. Is that correct?
Yes, you are right.
Yes, sir.
Great. So it is assumed to be true. Therefore, that assumption formed the basis of Jesus being birthed by someone who was a virgin. Is that okay?
Yes.
So, postulate is the foundation of something. It is assumed to be true. You cannot question its truthness or otherwise. In fact, it seems to be a fact of life, which must be accepted just how it is. You are not supposed to question it. The same thing also applies to auditing. We have 8 postulates of auditing. Please take note of these postulates. They come in the exams a lot. Me, I will tell you everything that comes in the exams. So these are the 8 postulates of auditing. The first postulate states that financial statements and financial data are verifiable. What do we mean by this? It simply means that when an entity prepares its financial statements, those financial statements, they are born out of some financial data. Those financial data, we can verify them. For example, if you say your sales is 1 million, there should be a data that speaks to your sales being 1 million. So we can get that data either through your invoicing, your sales order, and all of that. So those data must be what? Verifiable. So the same thing too. Financial statements and financial data should be what? Verifiable. That is to say, if we say we want to see it, can we get it? Yes. If we can get it, then we can say yes, it can be verified. 2, there's no necessary conflict of interest between the auditor and the management of the enterprise under audit. This is very crucial because if there is any form of conflict of interest, it means the auditor cannot be independent. Therefore, we must assume that there is no necessary conflict of interest between the auditor and the entity that is being audited. Because if there's a single thread of conflict of interest, it means confidentiality has been what? Hampered. So in order for confidentiality not to be hampered, it means there shouldn't be any form of what? Conflict of interest between management and that of what? The auditor. Is this understood? Okay, let's move to the third one. The third postulate states that financial statements and information submitted for verification are free from collusive and other unusual irregularities. What we are simply saying is that when an entity presents its financial statement for auditing, it means those financial statements by they themselves do not contain information or data that are made up of series of errors, fraud, and irregularities. We are assuming that those information are free from those things. It doesn't mean that there wouldn't be an error or there wouldn't be a misstatement, but the degree of misstatement must be what? Minimized, or it must be at a very low level. Please, do you agree with this particular postulate? Who doesn't agree with it? Maybe you think otherwise. Okay, great. And then our fourth postulate says that the existence of a satisfactory system of internal control eliminates the probability of irregularities. What we are simply saying is that when an entity has strong internal controls, when an entity's internal procedures, internal procedures are in place, it eliminates or it removes or it suppresses the probabilities of things not being done correctly. And this is true. If the those of you who work in the internal audit department, if your internal audits or if your internal control are strong and they are working, people will find it extremely difficult to find their way around because the controls are there, the controls are working. If you try to bypass, you can be caught by the controls. But where the controls are not existing or the controls are weak, it simply means that anybody can what? Have a field day. Postulate number 5 states that the consistent application of GAAP results in fair presentation of financial position and results of operations. Let me ask the question. What's the meaning of GAAP? What's the meaning of GAAP? I'm sure most of you've seen GAAP. You've heard about GAAP before.
So it's an abbreviation word for generally acceptable accounting principles.
Correct. Generally accepted accounting principles. So what we are saying is that if you apply generally accepted accounting principles, there's a high possibility that your financial statement and your financial results will actually show a fair presentation if you apply all the accounting standards in its totality. You provide all the disclosure. When it comes to PP, you apply IAS 16. When it comes to inventory, you apply IAS 6. When it comes to presentation of financial statements, you apply IAS 1. When it comes to revenue, you apply IFRS 15. When it comes to leasehold liability, you apply IFRS 16. When you do all of this, it means that the result you get, that result should be what? A fair presentation. If you don't apply these generally accepted accounting principles, it means your financial statement wouldn't show a true and fair view. So this postulate is saying that once you are able to apply them on a consistent basis, it means the results you will get should lead to what? A fair presentation. And you know that in accounting, fair presentation is very, very crucial. In fact, it is one of the essential ingredients of a financial information, that it must be what? Faithfully represented. If the information is not faithfully represented, it cannot be relied on. And always auditors are looking for this faithful representation. And then our sixth postulate states that in the absence of clear evidence to the contrary, what was held true in the past for the enterprise under examination will hold true in the future. This is absolutely correct. What we are basically saying is that your last year's closing balance should be what? This year's what?
Opening balance.
Great. So you cannot have a closing balance that is different from this year's opening balance. No, that cannot happen. So what was believed to be true in the past, that thing must continue to be true in the future or in the present. That's what this postulate is saying. And this is absolutely correct. So we move to our seventh postulate, and it states that when examining financial data for the purpose of expressing an independent opinion thereon, the auditor acts exclusively in the capacity of auditor. So what we are saying here is that it even goes to reinforce, and refence my earlier comment I made that the auditor must be what? Independent and impartial. Because when you are independent and impartial, it means that the expression of your opinion that you are giving, you are expressing that opinion exclusively in the capacity of an auditor. That opinion is not being expressed in the capacity as an employee of the entity. Because as an employee of the entity, you will not be objective. In order for you to be objective, it means you must express the opinion exclusively in the capacity of an auditor. And what will make you to express that opinion in the capacity of an auditor is when you abreast yourself to the fundamental ethical principles, the 5 fundamental ethical principles of an accountant. They being integrity, objectivity, professional due care, professional competence, confidentiality. They are very, very crucial. Our last and final postulate states that the professional status of the independent auditor imposes commensurate professional obligations. You see, auditors, and they are respected, and people really revere them. People respect auditors a lot. When they say auditors are coming, you can see that some people are like, they are trembling, they are so scared. People are so scared of auditors. What we are saying is that, my sister, as people are scared of you because you say you are an auditor, it also gives you a lot of responsibility to also be mindful of whatever you are doing. That's why as an auditor, you don't just go anywhere. You don't just eat anywhere. You don't just talk anyhow. You must be measured in whatever you do. You must be measured in whatever you do. Because that kind of respect that people are giving you, it comes with a lot of obligations. Okay. So thank you very much. We've spent close to an hour, 30 minutes. We'll bring our class to an end for today. Tomorrow we'll continue with the objective and general principles governing an audit of financial statement. That's where we'll continue tomorrow. But before we end the class, I want to open the platform for the next 5 minutes. If you have any questions, suggestions, maybe I was going through too fast.
Yeah, hello, Derek.
Yes, please.
I was asking, can we get this slide? Can we get it?
Oh, sure, you can get the slides.
Okay.
Michael, right?
Yes, please.
Do I know you personally?
I don't really know if you know.
Or
I've
we've met before?
maybe.
Oh, okay.
So I don't know how I'm going to get it. Are you going to share it where?
Yes, we
Is
are
on
on the same platform, right? Are you on the platform? Is everybody here on the platform?
Please, sorry, I'm only on the B2C Receipt General. That's the only platform I'm on.
Yeah, so B2C, the B2C class is what we are doing.
No,
I'm one of
I'm on the B2C Receipt General, but I thought there was a main B2C page, right?
Yes, I think so. There's a main one. Yes, I believe so.
So the main one is first my other number was on it and then I lost that number. So this is the one that is not on the main one, but it's on the receipts. I got the link from someone to just join this one, rather.
Okay. Don't worry, it will be shared.
All right, thank you. So grateful.
You're welcome. So please, questions. Let's use the next 5 minutes to ask questions on what we just did, or on, if you have questions on anything, you can ask, please.
Also, some of us couldn't start the class. I don't know if the recording will be shared so that we can play and listen to the beginning of it.
Okay. So this is one of the very nice things about the B2C classes. Unlike some other classes that some other people are having, we record our classes and we share the recordings the same day. So the recordings will be shared. The recordings will be shared. Don't
All right.
worry. That's
Thank
one
you.
of, you're welcome. That's what makes the class unique. And I'm using this as an opportunity to also encourage you to also invite your colleagues. You see, me, there's one thing I believe in. Personally, I love teaching. It comes naturally. And I also love helping people. I believe that I've been helped a lot in life, so I also like helping people. It comes naturally. Please, you've received the good news. You've heard the good news. You've seen the good news. What do I mean? My colleague took you through last week, management accounting. It is a very, very serious course that a lot of students through every year. Please take it very serious. You've seen how the classes are being organized and run. Please don't sit with the good news. You are supposed to spread the good news to your other colleagues so that they can also come and also learn so that we all pass together. Because one of the most difficult things is seeing someone writing receipts. It's very difficult for me personally. Sometimes I feel very heartbroken. So that's why I always try my best. When I'm teaching, if you ask me one question like over 10 times, I'll be so patient to respond to you. The reason being is that I'm not doing it because I want for you to just get it. I want for you to actually understand it. Because that's the best I can do for you to get an understanding. As for that one, I cannot take it away from you. So please, this is the good news. Share the link, share the page to your friends, those from other regions. Don't just enjoy it like that. Those from Takrade, Kumasi, Tamale, Ho, and the rest of the other places. Kumasi, yes, very important, Kumasi. And also those of you from Accra, share the links, let your friends join so that we all pass together, we all graduate together. Hopefully, I may come for you guys your graduation in a year's time. And we can only graduate when we are a family and we are all together. So friends, if there are no other questions, we'd like to bring the class to an end. Unless someone has a question or a suggestion to make. Please feel free.
I think we are all good.
Okay, great. Yeah, all good. Okay. So what I'm going to do is that going forward, I know what I normally do is that, okay, I normally get a rep and an assistant for my classes. So we've just started. So let's see how the process goes through. Okay. So friends, thank you very much. It was
Thank you.
nice having you, and it was a nice time. God bless you and have a good night.
God bless you too. Good night. We really
Good
appreciate.
night.
God
You're
bless
welcome.
you.
Amen. Oh.
Bye.
Okay, thank you, friends. Bye-bye.